I'm Corbett Wall with DVAuction, here with your feeder flash for Thursday, August the 29th, brought to you in part by Legacy Beef Cooperative. It's your opportunity and it's open to invest in Legacy Beef Co-op, which will own a percentage of Cattlemen's Heritage Beef Plant near Council Bluffs, Iowa. Each share also represents the right to slaughter one animal. Previous opportunities like this one have proved to be extremely good investments. For more information, check out this video that I'm going to attach. It's the same one that's been on here a few times, but if you haven't taken the time to listen to this interview about Legacy Beef Co-op, take the opportunity to do it. If you want to look into it more, go to legacybeefcoop.com. Got a big report for you today. Ghost cattle. And I have to give credit to CME's daily livestock report. If you guys aren't looking at that on a regular basis, you're kind of missing out. I try not to ever miss it. They are asking for a subscription fee for a year now, but it's well worth it if you guys aren't getting it. But they were talking about our beef production, and noted that a year ago USDA had estimated that our beef production this year was going to be down 8%. That's one reason that, or part of it, fundamentally, that we started seeing the market rise, and then we eventually saw all-time record highs in every class of cattle. But it hasn't really come to fruit. They've been, adjusting that every month and pulling it back up because we haven't lost that much beef production. Now, I told you earlier this week or maybe it was last week, I can't remember, it's been a recent feeder flash, that we had less cattle and more beef. Well, through July, your fed steer slaughter was up 24,000 over a year ago. That was up just 0.3%, but still higher on a smaller calf crop, less cattle. Your fed heifer slaughter was down 37,000, so we are starting to keep back a few, apparently. But I'm going to tell you another reason why in a minute. But fed heifer slaughter was down 37,000, or just 0.6% of a year ago. The main reason, where are these ghost cattle? Well, most of them are coming from Mexico. I don't think that's a surprise. Our Mexican feeder cattle, of course, this is for this year's feeder cattle. It's not the same cattle, but our feeder cattle imports are up big from Mexico. They're up 27%, or about 193,000 head of cattle. And you think, my gosh, where are all those going? Well, most of them going into feedlots here in Texas. And a lot of, especially Texas cattle feeders, prefer Mexican feeder cattle. Why is that? It's like the old Cocoon movie ads from Wilford Brimley. They don't ever get sick and they don't die. That's why people like them. And the quality of them has improved vastly, just like it has everywhere else. But that's where the cattle are coming from, and that's the reason why, the biggest reason, I don't think it's heifers being kept back for replacement. There's just a lot fewer spayed heifers that come over from Mexico than there is steers. So I think that's the reason we're seeing your fed heifers down. But we basically haven't seen any less cattle, hardly at all. Through July, our average carcass weights, this is making up for a lot of that beef production that we thought we were going to lose. Nobody ever dreamed we were going to make these cattle this big, but the packers put the carrot out there, and they take away the discounts and even giving some premiums for heavy carcasses. So they know how to fix things. I mean, just give a U.S. farmer or rancher a market and he'll flood it as quick as he can. But through July, your average carcass steer weight's 919 pounds. That's up 23 pounds over a year ago, or 2.5%. Your heifers averaging 840 pounds on the carcass. That's up 2.2%. So, right there is where you made up all that beef production. beef production is actually, fed beef production is up 2.3% over a year ago. And we thought our beef production was going to be down 8%. Well, that's a big fundamental adjustment right there. But our cows have almost been enough to offset that. Our cow slaughter up through July there is 546,000 head light over a year ago, down 14.1%. You think these cow packers aren't struggling? And every cow buyer you talk to says that his trucks are backed up to the chute before they start selling the weigh-up cows. And I don't see the market on those coming off, or hardly at all. But you know, we also see an increase in our beef imports. We talked about that just the other day. Now our fresh beef imports, which is that brush-fed stuff that I said they bring over and then they mix those 50 trimmings with it. The reason that they got so high this year, they have been plunging here of late, but not sure if we've come off of that. But our fresh beef imports are up 18% over a year ago. But processed beef imports are actually down 14%. But the processed beef imports only make up about 5% of the fresh. So I mean, we're seeing a lot of feeder cattle coming over from Mexico. We're seeing a lot of beef coming in from Australia, from Brazil, Uruguay, places like that. And it's sopping up the light part of where our numbers should be down, or our tonnage should be down. But still, we've got to enjoy some awfully fancy markets, cattle markets, fed cattle, everything, because of the thought that it was going to be a lot lighter. I don't know if this is going to be breaking news for the industry, but we're in a down market. Don't kid yourself and think this thing's going to come back like it did here 2 or 3 months ago. Yeah, we had a couple of days higher on the futures. That was an opportunity for you guys to get LRPs on your calves or any turnout cattle that you're going to have this fall, or maybe take a hedge or whatever you want to do. But don't kid yourself. We may jostle around here for a while, which would be great. If we can manage this down market a little bit at a time, that would be great. But we're not going back to $2 live weight fat cattle and all-time record highs on your feeders. Now, we saw feeders sell really well on Wednesday here, middle of the week. I mean, kind of approaching and getting near some of the all-time record highs, but we're nearing the end of the grass feeders. And some feedlots that want to get in on some of those, they really don't want to have to feed the big fat calves that are going to be coming here before long. And so they're really sopping up those green grass yearlings, the few that are left around. But, you know, I mentioned that Mexican feeder cattle imports were up 27%. Canada imports of cattle were down 2%, but did not make up near that many, only down 2,200 head. But just some interesting information, and a lot of that, or leading me into that, was from CME's Daily Livestock Report. I enjoy that report, and I think you would too if you subscribe to it. Also, Ranchers for Trump. I told you on our last visit that Jack Payne, my good friend that I go out and help auctioneer his special feeder cattle sales a few times a year, and really gotten to be good friends with him. He is a good guy and no nonsense type of a guy. 4 years ago, we had a Trump rally there at Nevada Livestock Marketing in Fallon, Nevada. I tell you what, Trump's down right now. And just try to imagine living in a world where Kamala Harris is the President of the United States. That is scary. Tell you what, guys, we've got to get something done. Nevada is a battleground state. He was leading it just a couple of weeks ago, and now he's down with this jump that she got from her convention there. But we have got to stir some interest, and we've got to get things going in the right way for Trump, because he has got to win this election. We're going to have a huge Ranchers for Trump rally at Nevada Livestock Marketing. It's going to be on September the 28th. We're going to have a rodeo event. We're going to have muley roping. Going to have breakaway roping for the girls. They're going to have a ranch rodeo branding type event. You know, the younger competitors can get in that too. We're going to have a special feeder cattle auction. We're going to have a Trump cattle auction where people can donate some of their cattle to the Trump rally. We will auction those cattle off, and all that money will go to the Trump campaign. We're looking at making this thing really big, guys, and we've got here just right at a month to get it done. And right now, Nevada Livestock Marketing is looking for sponsors. If you guys would like to be sponsored in this unique event to try to help get Trump elected here, guys, big or small, get a hold of them at Nevada Livestock Marketing in Fallon, Nevada, as we're going to have a big Ranchers for Trump rally. And you're looking at changing your genetics up. Check out Gelbvieh. Carcass data from 3,600 head of Gelbvieh and Balancer cattle resulted in 88% choice and prime carcasses, with 91% of those carcasses being yield grades 1, 2, and 3, and not 4s and 5s. For more information, go to gelbvieh.org. Let's talk about your board on Wednesday. August live cattle futures down $1.42 at 183.75. Yeah, we're coming down, but we were up more than we really expected to be earlier in the week. October, and nobody's trading the August live cattle anymore. It's just down to the last few days here, guys. I mean, you might think, oh my gosh, all of a sudden we've gone negative basis. Well, everybody's hooked up to the October, and it's under 179 here. So that looked like a bunch at 142. They're just trying to get it pretty close to what they think the weighted average is going to be, and the weighted average is going to be a bunch lower this week because we've already seen people puking cattle. Not many, but really it's kind of the opposite of last week because we saw some support in the board early, no trade. Now a week ago we saw weakness in the board early, and we saw people puking fats, and then we saw support later in the week, and then that put it all to a stop, and then we didn't hardly have any trade. This week we saw support early, no trade. Your packers are not going to give in. They're superior negotiators and poker players compared to the fat cattle sellers. Now it looks like we're going to have some weakness here late in the week, and I'm sure people are going to start puking fats lower again. The market's not lower till you start selling them lower, people. October live cattle down 77 at 178.62. That's what everybody's hedged to on their show list this week. Talk about your back months there on live cattle, down 17 to down 107. August feeder cattle down 65 cents at 243.55. September down 62 at 241.30. And your back months were a little bit mixed. We saw down 40 cents on the farthest out traded month of feeder cattle to as much as 20 cents higher, which is really nothing. I'll tell you what, your grains are for nothing. And we're getting right here at harvest. We're going to have a bumper crop, and they're not worth anything. I mean, below the cost of production here. Corn for December, and that's new crop corn down 2 cents at 3.92 3/4. November beans down 9.5 cents a bushel at 9.77. Kansas City hard red winter wheat for December was actually up 9 cents at 5.55 3/4. Talk about fat cattle trade. Still hardly anything trading on a direct basis, guys. Very, very slim, and quite a bit lower, trading at the very bottom of last week's price spread. Iowa sold about 300 on Wednesday. That's all they've sold all week. And 184 on a live price on Wednesday, 290 for a dress price. They're not bidding any better than that right now, guys. Nebraska, about 100 head. They sold a few more than that this week. 184 for a live price. In the Northern Plains, guys, 184 in the Northern Plains. And of course the Southern Plains, I mean, my gosh, how much farther back are they going to trade? We don't know. We did see last week on very limited trade that the north-south premium there had kind of went away, but we're not seeing any bids in the southern plains. We haven't seen any trade at all in Kansas and Texas. I did have a couple of fat cattle auctions I wanted to mention, give you an idea what a price is. That's where you have price discovery, is in an auction, right? Northern Plains, Sioux Falls Regional Livestock in Worthing, South Dakota, DVAuction broadcaster there. 1,100 head of slaughter cattle and feeding, including the cows and bulls, but conventional fat cattle there in Worthing, South Dakota, sell $1 to $3 higher, from 182 to 188. Program cattle, non-implanted or drug-free, from 184 to 190. And they had dairy steers from 162 to 164. Another fat cattle auction, Glacial Lakes Livestock in Watertown, South Dakota. Another DVAuction broadcaster there. We're glad to have them. They sold their conventional fat cattle, just straight up steers and heifers, 180 to 185. That was about $3 lower. Program fats from 185 to 188, and had a good market on their dairy steers in Watertown, South Dakota. Fat Holstein steers from 166 to 171. Box beef cutout values sharply lower on the choice. I mean sharply lower. This is weird. I was talking with one of my friends there that stirs my brain for the feeder flash once in a while. He was talking about, I don't know about you, but he says, I would a whole lot rather cook out on the grill when it's 75 or 80 than I would when it's 100. Yeah, no shit, me too. And now we've got football season coming, we've got tailgates coming, we've got temperatures, at least in the central part of the U.S., they're starting to come down a little bit here later this week. Of course, they're boiling out east, and that's all you see on the TV. But, you know, they're going to have to take their turn. We've been boiling in it here for several days here in Texas, but it's going to get really cool. And hopefully it kind of stays that way. I'm sure we'll get back to some heat, but maybe not any prolonged heat like we've had all summer. But I don't know about you guys. I'd a whole lot rather grill out then watching a football game than I would, you know, when it's 100 degrees. But it's just weird. Choice cuts down 468 on Wednesday afternoon at 307.29. I mean, just that's threatening to get under $300, guys. Selects down 262 at 297.63. Your slaughter, 354,000 estimated slaughter through the first 3 days of the week. That compares to 363, so about 9,000 less than the same week a year ago, and almost 20,000 less than the same week a year ago. Talk about what else is going on. Farapiece, the revolutionary product that's scientifically proven. The active ingredient in Farapiece is a synthetic analog of the maternal bovine appeasing substance, which is a naturally occurring substance that is secreted by the skin of the mammary gland of lactating animals. And if treated there, it helps eliminate stress in all cattle that are treated, guys. For more information, go to Farapiece.com. Let's talk about your feeder cattle market. Your real-time index on DVAuction, based on an 800-pound cash auction steer up through your middle 12 states, gained ground. Been losing quite a bit, but gained ground. And we saw good sales from one part, top of the country, all the way to the bottom on Wednesday. And thank goodness, the Wednesday sales have been being pushed around here the last several months. So the Wednesday sales got to see some big gains here middle of this week, and I'm glad to see it. Your real-time index after Wednesday's trade, 241.68. That was up $1.10. Your latest CME cash feeder cattle index, just about $1 higher than that at 242.64. Going to be going to Ruidoso, New Mexico. Talk about chilly. It's only supposed to be like 72 for a high there this weekend. I hate to. I may have to break out the felt hat. Then I don't like to flip-flop, so then I'm going to be stuck with a felt hat with all of September to go. I don't know. It's really going to be stressful on what I'm going to end up doing. But I promise you, I will not be wearing a coat with this straw hat. Got to stick to your ground somewhere, guys. But they're having the Ruidosa Select Yearling Sale coming up here this weekend. They're going to have the horse sale on Friday and Saturday. They've moved all the big races that are usually with All-American Weekend in Ruidosa. They've moved all those races in Albuquerque to Monday, so more of those buyers can come to the horse sale there in Ruidosa on Friday and Saturday. It'll be on DVAuction.com if you guys are interested. Talk about your big feeder cattle sales on Wednesday. OKC West, El Reno, Oklahoma. DV Auction broadcaster there. They had 4,500 head for their two-day sale with calves on Tuesday and feeders on Wednesday. I mean, the market was snappy good. Feeder steers and heifers on Wednesday in El Reno, Oklahoma, $6 to $8 higher. Calves on Tuesday were $5 to $10 higher. We're your National Beef Wire stick-out sale of the day. Notice this is just a Wednesday sale, so it's got your feeder weights up there. But look how well those cattle were selling. 497 head of 7-weight steers in El Reno, Oklahoma, averaged 750 pounds with a weighted average price of $246.02. 611 head of 8-weight steers averaged 833 at $239.87. 647 head of 9-weight steers averaged 926 at $225.33. Look at some heifers. How about 389 head of 7-weight heifers? OKC West averaged 743 at $234.05, and 257 head of 8-weight heifers averaged 833 pounds at $216.94. Tell you what, the Drummond outfit out of Pawhuska, Oklahoma, had some awfully nice cattle in there. They were about their top sales there. 142 head of black steers weighed 697 and bring 268 in El Reno. Then they had 106 head of 808-pound steers from Pawhuska there, bring 254. You thought that was all over, right? Check out some of these other outstanding quotes from all around. How about Wright County Livestock in Mountain Grove, Missouri? Another DV Auction broadcaster. 124 head, 819-pound steers, bring 250. South Central Missouri, guys, right there. How about Stockman's Livestock Market, Yankton, South Dakota? They recently added DV Auction broadcasting. I think there's some kind of a trend here. How about 74 steers in Yankton, South Dakota, averaged 850 pounds at $262.75. Wow. But that was not our top quote. I got to give credit to Mitch Barthel there at Tri-County Stockyards in Motley, Minnesota. It was your Macrison no BS top quote for the day. He actually had two of them. He sold 59 steers, weighed 815 pounds at $257, which is a real high crazy quote. But the biggest top quote for the day was 4 loads of heifers. I'm showing you one of them. 4 loads of heifers, not replacements, not spayed, but those 4 loads averaged 880 pounds at $246.50. That's your feeder flash for Thursday.
I'm Corbett Wall with this feeder flash feature. I'm here with Chad Tinninger from Legacy Beef Co-op and Cattlemen's Heritage. And we're going to give you some information about getting in on the ground floor of a co-op that's going to own part of Cattlemen's Heritage, a new privately owned packing plant. Hopefully we'll give you an opportunity to stay profitable and stay in the cattle feeding business and compete with the big 4 packers. How you doing today, Chad?
Good, Corbett. Glad to be here.
Can you tell us a little bit about this new and exciting venture that you got going?
Yeah, I'd love to. So we started out, Legacy Co-op is a outshoot of Cattlemen's Heritage Beef Company, the new processing plant outside of Council Bluffs. That'll be 525,000 head a year. We'll be processing right outside of Council Bluffs off of the I-29 corridor over there. We got about 132 acres. We've cleared the land. We're ready to break ground next spring. and Legacy Co-op will be the supply of the cattle that will feed that plant with the producer involvement.
Okay, so all the cattle that come into that plant will be through Legacy Co-op.
That is the goal, yes. We want to make sure that the producer has a say in how the plants run, the say in how the market works, all these things that we as producers, when I put my producer cap on, I want to get the best value for my cattle. Well, I don't think there's any way I can ever get the best value for my cattle if I don't participate in the processing end of it, because obviously in the last decade we've seen very clearly that the only way we're ever going to get what we think we deserve is to actually participate in the ownership.
Okay, so you say these co-op members are going to have a say in what goes on at the plant. How's that going to work?
So how we've set up the co-op is it's buying shares. One share is one delivery obligation a year. So there's 525,000 shares up for sale. Once you deliver your cattle, what you're going to gain in the beginning is you're going to get access to a grid. Everybody knows how a grid works, premiums and discounts. But our grid's going to be tied to the box beef cutout. We are not going to tie it to the CME. We fundamentally believe that the CME does not represent the cattle fundamentals in the country on a day-to-day basis. I think we could all agree to that. There's no traders in the pits anymore. There's no human contact. It's computer algorithms trading on headlines, and we're at the mercy of it. So beginning, the fundamental belief is let's tie it to the box beef cutout. At least then we know we got a fair shake. You also, if you're a member of the co-op, you get a $25 bonus every time you deliver. So automatically it's $25 more than you would have got anywhere else. And then at the end of the day, for buying into the co-op, that co-op is going to have roughly, give or take, 20% ownership in Cattlemen's Heritage Beef Company. So true ownership in the plant, in the company, in the brand, whatever we can create out of this, you have ownership in and get a margin in those profits.
So these unit shares, you assume they're going to gain in value as time goes on.
Every other company that we've looked at like this in the pork industry, there's more of these companies with producer involvement. All those shares just increase in value. You can sell them, you can, your kids can inherit them, pass it down, but ultimately you have a say in how the system works that you're participating in.
So you're offering producers an opportunity to get in on the ground floor.
Yeah, I've been in this business my whole life, and we as producers, my whole life we've been saying, we don't have any say in how we sell our product, what comes from it. We're at the mercy of everybody. This is an opportunity to be in the ground floor at the cheapest you're going to get in to actually take ownership in a company that you'll participate in. We've set it up. The Cattlemen's Heritage will have its own board. The co-op will have its own board. They will work together hand in hand in an advisory board. Each board will have 2 members of the other. So we have true ownership in the game. So when we talk about how are we going to sell cattle or how's the grid going to work exactly, you're going to have a seat at the table with us deciding those very things.
So the plan itself, you're expecting to pretty much run on a consistent margin then, and then the extra money is going to be premiums for the producer?
Yeah, it's a pretty simple system. You tie a grid to a set point. We're going to tie it to the box beef cutout. Then you have to plant production. You can't break the plant, right? It costs X amount to run. You minus that out, and then you start on quality of cattle. You're still going to be paid for quality cattle on a premium discount basis. That would be very similar to how a grid works today. One thing we are looking at pretty closely that we might change, especially when you get discounts on 4s and 5s. Right. In today's world, in reality, there's not really much of a discount on a 4. And what's coming up that a lot of people probably don't realize, but 45Z, it's a huge tax credit that's coming out of the tax code for anything biofuels. That's what all the ethanol industry is doing. That's what they're talking about. That's why they're paying you. Well, our fats and tallows in the cattle are worth gold right now going to the biodiesel. And we're not getting a part of that. And there's going to be yet another revenue stream that we won't see. So, when you start adding up all the value adds that we as producers do, that we don't participate in, at a certain point in time, all of us producers are just saying, I'm doing the most I will do to create value that I don't get to participate in.
So we talked about the cattle. What kind of cattle are you looking for?
We're just really looking for northern western genetics, right? That's going to be the cattle, the kind of cattle we feed where we are. If you put a pin in Council Bluffs, that's where the plant will be. You go 300 miles in any direction, that's a lot of high quality cattle. And so we're not going to limit it to just black hided or anything like that. It'll be just all quality cattle because the system's still set up. You deliver quality, you'll make more money.
Okay, so no particular program. It's just where you're at on the globe. That's the kind of cattle you want.
That's exactly
Iowa
right.
type cattle.
Yeah, and the system will work that if somebody thinks they're going to deliver really bad cattle, the negatives will still be there. Yeah. So it doesn't work. It still functions the same. And within that, over time, again, will there be programs that maybe develop like anything does? There could be. If there's more value at the end, of course, why wouldn't we bring it back into the plant? And then again, the co-op will own 20% of the plant, so it's a true dividend at the end of the year.
So are you looking at Cattlemen's Heritage having a retail label?
Yeah.
Okay.
So the end goal is create a brand. Okay. So we've talked a lot about the last 3 years. We're 3 years into due diligence of this plant. That's why we're so confident in where we are today. What we've discovered is the cattle industry has done the worst job ever of telling its story of its greatest asset, and that's the farmers and ranchers and producers. We have all these amazing men and women working every day in this industry. We don't tell their story.
Right.
You know, so we're going to tell the story. Our marketing is going to be, you know, look at these family farmers, look at the ranchers, look at what they do every day. When they don't do a good job, they lose farms. They lose their livelihood. So you better believe if anything in the world of doing the best quality for what you're putting on your kitchen table, it comes out of our farmers and ranchers.
How are you going to compete with the Big Four?
So there's a couple ways. We have done 3 years of due diligence to figure out why plants don't work when they don't work. What causes a failure, right? Undercapitalized, we have the capital. Bad location, that I cannot overstate having a bad location. We're outside of Council Bluffs, there's 1 million people right outside that door. So we have plenty of work. The other thing we look at is, how do you compete? That's the question, right? How do you compete? Well, the co-op will be a supply of cattle. That's a bunch of producers that have signed up to deliver cattle because they want to share in the upside profits. So on the front side, you can't outbid the cattle. Those cattle are already committed. They're coming in, and they're committed because they're going to get rewarded better. Mm-hmm. So we know we'll have the cattle supply coming into the plant. Then selling the beef, what we found over the last 3 years is, as frustrated as we get as producers that we can only really sell to a handful of companies, on the retail side, there's a lot of frustration on that end too, that they only get to buy from a couple of companies. So we've been contacted by over 80 companies to buy beef today.
But at this point, you haven't gone into partnership with any prospective customers.
We haven't yet, but we're finalizing some of that. We will have a major partner on offer.
I think you need to.
And we will. We're working through that. So what we wanted to make sure is, A, do we have the capital to build? Can we build the right plant, a highly efficient plant? Are we in the right location? Once we cleared all those hurdles, that's a big part of what a retailer, an end user wants to know too.
Sure.
Do you guys have all your ducks in a row so when we're ready to buy meat? So before we break ground, we'll have a major partner signed up to buy the product. Another way that we've done that we feel is really important is, these old plants, they're old, they're tired, they're inefficient. They started by, you know, processing 2,000 head a day, they're doing 5,000 head a day.
Right.
And, you know, there's plants in this country that, you know, if you built them today, might have 2 forklifts and they got 36 running around that plant, things like that. The way we've designed it with new technology, proven technology, our technology came out of Europe, New Zealand, and Australia. And the reason we're doing that is they hit their labor issues 20 years before we did. So in a world where labor's tight, especially in this industry, you got to be as efficient as you can. We will process 2,000 head a day. A typical plant takes 1,200 employees to do that. We'll have 800.
Wow.
400 less employees. That translates to $25 million a year in savings to the plant, which transfers $50 a head cheaper production cost. So our plant will operate at a cheaper per head production cost than any plant in the system. And that's where you get the margin. So when you start thinking about how they're going to squeeze you out, well, they'd have to start losing $100 a head where we start breaking even. Mm-hmm. And that's an important part of this that we looked at. Again, it's not that complicated to say, I'm going to go build a plant and then just go throw one up somewhere. What's complicated is to be successful.
Right. And I assume you've got your team pretty well set, because you've got to have people that have experience in this kind of stuff, because it's a tough business.
Yeah, we get asked that a lot, and that's a really important question. And I make sure everybody knows today, I'm the head of the company. I will not be running a plant. That is not my expertise. I've never claimed to be that guy. But what we will do is, the beauty of what's happening in the system is, because there's just a few companies that really have the top guys out there, mm-hmm. A lot of people retire 56 to 60 out of that world, and there's a lot of people, they're not even close to done. Right. There is so much talent in this space that's there to available. We've identified it. We've hired advisors from day one. So I have an advisor that his entire job is just to identify that talent and make sure that when we open our doors, we have the right talent in place. Because there's another way. If you want to fail, just don't put the team together. You know, try and save money on your management team. That's a great way to fail.
So, you know, we're looking for some new co-op members. And how much risk do you think there is involved in this?
What we've done is we went 2.5 years and we talked to producers and got all their point of views and heard every comment we could talk about. And at the end of the day, we developed this program we're in today. And this is the final program we're going out. So what it is, there's various stages of the co-op membership. You are rewarded to get in early. The first round, there's 5 rounds. The first round is $125 a unit. It goes up $25 every round. It's split pretty evenly through the rounds. So that's not a huge investment in the cattle world today.
No, that's especially the prices we're at now.
The way it is today. How it works is right now it's $25 down. So if you want to buy a unit today, it's $25 down. Okay. That holds your spot. Then we're going to come out in end of the year, right at the end of the year with the final, here's your final agreement, sign up. If you decide at that point in time, you know what, something's changed, I don't want in on this, we'll refund $15. We got to keep 10 because we spent 10 to put the system together. So all you're really putting at risk today is 10 bucks. 10 bucks a unit. And if you don't like it at the end, your 15 comes home. If you do like it at the end, before we break ground, roughly 30 days before we break ground, the balance of it will be owed. We made it as simple as we could. To be honest, when we first started this, I was hoping to have the producers own 60, 70% of this. Mm-hmm. We found there's not a lot of appetite for that because then you're talking $500, $600, $700 a unit. Mm-hmm. I understand that. That's a lot of money.
Well, it sounds to me like you're not really looking at this co-op to give the bulk of your capital to build this plant.
Absolutely not.
You're ready to build the plant. You're just giving folks opportunity to get into the supply of the cattle.
The plant's going to get built no matter what, because what we've done in 2.5 years is we've found the debt, we found the equity, we're working on all these pieces of the pie. We've got the MPAP award from the USDA, which is the largest, the $25 million you can get from that to build more packing industry, right? So we've been working on all these pieces. At the end of the day, the $100 million, roughly, if you sell 520,000 units, that's come from producers, but that's a $500 million plant. So that's where you get your 20% ownership, give or take. It's a true equity play. Mm-hmm. And for us, that's the passion of it. The producers need to get involved so we have the final say in the outcome also. Anybody that's in the cattle industry should be in this. And I tell bankers, I'm talking to a lot of bankers, there's not a cattle feeder that I know that shouldn't take this opportunity. When you think about what it costs, if you return $25 a head just on, you know, once a year, it gets one space, but that's 5 years, your initial investment's back just off of that, and then you've risked nothing.
Right.
It's a low risk maneuver that opens up a top end. So we did a lot of data mining to find out how the math works. In the last decade, if you just take an average of how the industry has worked in the past, box beef versus what an average would be is about 61.3% of the box beef cutout is where the industry has averaged in the past. In fact, from 04 to 13, that was exactly what it averaged, 61.3. If you take that same number, extend it to today for the last 10 years, you'll find between what we sold our cattle for and what the packer had at 61.3, there's $206 on every animal of a margin that we didn't participate in. So I've heard a big pushback I've had is, well, if you're going to give the producer all the money, the pack goes broke. Well, I'm here to tell you, the numbers don't lie. You can do the data mining yourself and figure it out. There's $206 on every head we sold in the last decade on average that we didn't participate in that margin. I'm not saying it's all ours as producers. I'm just saying there's a buffer there that certainly there's a middle ground we should all partake in.
Right, right.
We've been told our whole lives, you do it our way, you don't get paid at all. Now we're sitting here saying, if you do it, if we create more value, we're going to pay you for it.
Well, Chad, thanks for all the information here about Legacy Beef Co-op and Cattlemen's Heritage. If folks are interested in making an investment or finding out more about this, where should they go?
Best place to go would be go to legacybeefcoop.com or cattlemensheritage.com. Either one will give you a link to go here to get the information.
Okay. Well, I appreciate all the information today and enjoyed the visit.
Thank you.